Now, it turns out some people have found that the best tax strategy for retirement is, well, actually, it's a moving van. For instance, in the state of California, they've lost over 750,000 residents over the last 3 years because of its oppressive state tax rate of 13.3%. They're headed to states like Florida, Texas, and Tennessee, which, in case you didn't know, don't have a state income tax. Moving to escape taxes might be a little extreme for our listeners. What are some of the easier items that you explore to limit high taxes in retirement?
Well, here in Northwest Ohio, it's still pretty cold right now in February, and I think moving to Florida doesn't sound like a bad idea. A beach and warm weather sounds
really
fantastic.
nice, actually.
And, if you look at it from a tax perspective, that is one of the things that you do see a lot of people, and, especially when you have states like California, 13.3%. Ouch. That's a pretty high tax bill to take a look at. But we do have some good tips on how to limit the taxes that you pay in retirement time. Number one is to look at shifting money to non-taxable accounts. So if you have a traditional IRA or 401k, you can start to transfer, some of that money over to a Roth, do things like a Roth conversion. Now is a really good time to create what is called your 2024 tax roadmap. We're not CPAs, we're not accountants, but we work hand in hand with a lot of our clients, CPAs and accountants. And what we're trying to do is trying to figure out, with the money that they've either currently saved and or are putting into, future contributions, does it make sense to either convert some of the money that they have now over to a Roth IRA and or shift where they're contributing money in the future as well? Remember, there's no limits on Roth conversion. So we do a lot of presentations, and people will tell me, well, you can only do $8,000, or my CPA said I wasn't eligible for that. But for a Roth conversion, there are no limits on what can be converted over. You also want to consider investments that aren't taxed as ordinary income. There's some investments that are, more favorable when you own them in after-tax accounts, things like, stocks, bonds, or real estate. Those investments will get taxed as a capital gain, not an ordinary income. So those can be more favorable. And in fact, there's 3 different tax brackets for capital gains, and one of those brackets is at 0. So you should look into investing money into those areas that can help save you money. Something else, Chaz, I know that we put together is called the Tax Savers Checklist. So within the Tax Savers Checklist, there's about 25 different items that we go through on how we try to take a look at helping people minimize the taxes that they pay. And one of the things that I've noticed in a lot of the meetings that you have when you're working on developing a financial plan, you talk about the optimization and the withdrawal strategies on their investment accounts, and that can also make a big difference to the amount of taxes that they pay in retirement time as well.
Yeah, I mean, that comes down to really just which dollars are you spending, which dollars does it make the most sense to spend and when. And so really that kind of dovetails into another one of the concepts that I think is important for tax planning, which is tax location. Most people are familiar with tax, or I should say asset allocation. We'll talk about tax location. And essentially with tax location, we're putting the assets that generate the most tax into the tax sheltered investments. So like your real estate investment trust, your high yield bonds, your high yield tax inefficient, let's say, consumer stocks or cyclical stocks that pay high dividends. You want to own those in some, your IRAs, your 401ks, and then some of your other tax efficient vehicles like maybe your small cap stocks or growth oriented investments that don't necessarily pay dividends or earnings. Those are great investments to put into your Roth accounts. And so what you're effectively doing is protecting the tax the shelters. You're using the tax shelters in the most appropriate way. So that's one way to do it. Tax loss harvesting towards the end of the year, we see people starting to sell some investments, offsetting investments maybe that are at a gain with investments that are at a loss to kind of wash taxes. But the biggest part of tax planning, as we were just joking around during the segment, there's really no way to get around paying taxes. I mean, you could not pay taxes, and that's a whole other different story. I know I don't particularly look good in orange and black, definitely. I want my tax limited, but not my freedom. But essentially, I think one of the ways that you can limit your taxes without being too funny is paying more of them. And what I mean by that, sometimes I say that and people look at me like I have two heads, but literally right now is probably one of the best times you could pay some tax, to be honest, on your investment accounts. Tax rates, we haven't seen, federal income tax rates haven't been this low since the 40s and 50s. And so it's kind of like taxes are on sale right now. If you go into the grocery store and you're looking at buying something on sale, well, what is a sale really? What do you know? There's three things that you know. You know what the price was before the sale, you know what the price is now, and you know how long the sale is going to last generally. And so the Tax Cuts and Jobs Act, that monumental tax legislation that that President Trump signed into office in 2017, I think, those tax cuts are expected to expire in 2025 without any further legislation. And so if you're not sure whether or not you should, pay more tax now or later, we can do that tax clarity, that tax roadmap, and kind of based on a sequence of withdrawals, which we, generally would set as we're going to spend your taxable money and then your tax deferred money and then your tax free money. If it illustrates that, you should be paying more tax now, if that ultimately leaves more money to your family by doing that and doing Roth conversions or, changing up the sequence, at least we'll know going into it. Because we don't know how much taxes are going to be, but we can have a plan for it.
And, to me, it really comes down to knowledge, knowing what the tax code is, knowing how to apply it to your situation. Again, another perfect example on our tax savers checklist is we talk to folks that are taking required minimum distributions. So folks that are taking required minimum distributions, a lot of people are philanthropic, whether they give to their church or a charity of their choice. And, at the end of the year, they might write out a check and make those donations or do it, as going to Sunday service. But what they don't realize is that they could be donating money directly out of their retirement account for their required minimum distributions. That keeps the money off their taxes, and then 100% of the dollars goes to the charity. So it's kind of a win-win situation. Again, knowing what your situation is. And so right about now, as it's February, you're thinking taxes, you're starting to get your paperwork ready. You probably either scheduled or getting ready to schedule that tax meeting. There's one more meeting in 1 hour worth of your time that I would say take this time to schedule with us. And, for the first 5 callers from the show, we'll provide for you a complimentary 2024 tax roadmap, and we'll also walk you through the tax savers checklist. So, a way to go through checking the boxes and taking a look at what makes the most sense in your situation and how to keep the government away from your money. And taxes can be a big chunk of it. And so if we can help keep a little bit more of your hard-earned money, that's what we'll do by going through the tax saver checklist. And again, creating for you your 2024 tax roadmap.
As the tax deadline for last year is coming, closer and closer, April 15th, a lot of people are focused on how to make sure they pay what they have to, but, hopefully find some tricks to maybe mitigate that, but haven't really done the planning for the years ahead, looking forward when it comes to taxes. And that is where having this tax savers checklist, having that tax roadmap done can really, I think, provide a lot of value. But you have to take that initiative. Be one of the first 5 callers right now and schedule a time to speak with the team at America's Retirement Headquarters and see what they can do to minimize what you have to pay to Uncle Sam. 419-794-3030 or go into the website at arhq.com.